Well, now we move on to panel discussion. In keeping with the innovation and globalization theme of the Bharat FinTech Summit, we are moving into a panel discussion dedicated to the topic on identifying the white space for fintechs. What has the first wave of fintechs left to be explored? And let's welcome our co-panelist here on stage, Mr. Rajesh Sehgal, Managing Partner, Equanimity Investment, Mr. Adit Poddar, Founding Partner, Gemba Capital, and Mr. Mahesh, Co-founder and Partner, Amicus Capital Partners. We would also like to welcome our moderator for this session, Nilufer, Consultant FinTech. Well, this panel discussion is going to be very, very interesting. In this session, we aim to uncover the untapped opportunities in the fintech sector, exploring potential innovations and gaps left by earlier ventures. We look into future trends, highlights areas ripe for development, and discuss the impact of global fintech advancement. Join us as our expert panelists delve into these topics, offering insights into where the next wave of fintech innovation might lead. So we're going to cover all these topics in this panel here, and we'll definitely have our panelists here in next 2 minutes. And our moderator for this session, Ms. Nilufer.
Shall we start off? Yes. It's nice to start off on time. So, welcome everybody. I think this is one of the first sessions. We've picked up our coffee, so sorry if some of you don't have coffee. We started off with our day with our coffees. So I think as the topic talks about it, we're basically going to talk about white spaces. Some of you would have heard the ED in the morning. He mentioned very well saying, lots done, but lots to be done. So I guess in the entire space of fintech in specific within startups, we were large enough contributor as fintechs. We will look at some of the what is the issues as well as what the open points today are. Without much ado, let me just start. Maybe Adit, as a first question, what do you think are the left out white spaces in the context of both product segments as well as geographies, if any?
See, I feel overall financial services probably a 200 billion profit pool, right, in India, revenue pool. And fintechs would be like 6-7% at max, overall. So there is a lot of white spaces, a lot of room, which we see from our vantage point, which is early stage investing. And, you can pick up insurance or lending or, B2B, infra, every segment which we can talk about, probably, we can double click on each one of them. But there is a lot of space. There are a lot of white spaces, especially for tech-enabled companies to kind of make their mark, right?
And Rajesh, Mahesh, if you were to pick one or two in specific, anything that you would like to comment on, either mid-stage, late stage, early stage?
I think it's an interesting juncture where we are, especially in the fintech space. We know that globally, and India is just following the global lead. Fintech is the sector that attracts the most capital, the most interest, and I think it impacts the most number of lives. Innovation, white spaces, I think these are pillars on which the entire finance, banking, insurance industry is built on. And that is why we are a space that are heavily regulated as well, because the regulator wants to make sure that you have certain boundaries drawn and you operate. You can be as innovative as you want as long as you comply with the regulations. I think going into subsectors, and I'll just briefly mention a few areas that we think are still white spaces. I attest to his point, Adit's point, that there's so many white spaces. It's still early days. But I think if you look at lending, there's enough and more that's happened there. But in our opinion, there's lots to go. Of course, RBI has become, more active in that space. But thankfully, they've given enough rope for players to be innovative. That's the reason why the fintech lending piece in India also has, become sizable. The other space clearly is insurtech. I think a long way to go in insurance. Our fund, we invested in a company that's focusing on claims, not just claims management, but making sure that you get your claims. So I think swift redressal of claims, seamless. Can you make it seamless? Can you make it swift? And I think that is in my opinion, a huge impact on people who are craving to get those claims. And the last one more piece will be wealth. I think wealth tech has a long way to go, still very early days. I think not even the top 1% of our population, investing population, people with a certain, decent threshold of wealth are catered to by the technology piece in there. So I think the whole middle class, I mean, I don't even think we've scratched the surface there in terms of financial planning using technology or innovation for that piece of, or that segment of the population. So yeah, I attest, huge runway, long runway, long way to go.
Just to add to what Rajesh said, agree with all the points. I think two points that I would like to add to. The first one is SME. I think India is a land of entrepreneurs, and I think that today there's a lot of friction in how lending is done in the SME space. I know there are a lot of fintechs that are focused on that, but I think it's a very, very big white space because the opportunity set in SME is just not lending to them, but actually customizing products and services that an SME needs. Because every SME, or based on the industry that you really operate in, requires a certain differentiated product. And today, I don't think the cookie cutter model works, which banks and NBFCs are doing. So I think fintechs can play a big role there. Tech at the back end, I think, will be at the backbone of maybe allowing for differentiated products, customized products to be developed. So I think that's the additional point. The second one is on the infrastructure side. I think there's been a transition from physical to digital, from on-prem to cloud. I think all of these provide, I think there is, a lot of these layers are broken in many ways, and lots of investments are going in. So I think that's probably an area where there's enough and more that can be done, especially enabling banks be a little more robust, digital, and things like that. So I think combination of these two, in addition to maybe insurtech and the other segments, are probably big white spaces.
I would just like to add one more thing, Mahesh, to what Mahesh said, is on the SME side, which Mahesh mentioned. There are around 70 million MSMEs in India, with only 20% of them, around 50 million, getting, not getting access to formal organized credit, right? Only 20 million of them get. The remaining do not even get it from NBFCs and banks. And total credit demand would be almost like 100 lakh crores. And only, again, 20% of that demand is met by the organized space. So there's huge market for SME lending if you can do it in the right way.
So the use cases that we chat so far were more domestic, which itself is large market by itself. But from an international point of view, whether it is, say, remittance, trade payments, trade per se, do you think there is merit in, there are white spaces emerging as India is becoming a much bigger economy, both from a size point of view as well as consumption point of view?
Can I go first? Yeah, I think it's a topic very close to my heart. I think that is the most inefficient segment of the fintech space that exists today. It is ripe for this word that is bastardized, disruption. I think that space is wide open for disruption. And I encourage entrepreneurs. I wish I was one. I'm just an investor, but I think entrepreneurs who are thinking of where to go next, I would be a huge votary of that. I have kids, for example. I have kids who go, they're studying abroad. Sending money to them is A, painful, and B, very expensive, right? This is like a very simple example, personal example. But you look at businesses. We fund all these businesses. They do business with other geographies as well. Sending money, receiving money, A, it doesn't happen in a timely fashion. B, some examples, again, that's an exception, but it does happen. Money is lost. We don't know where the money is. Your bank has it, my bank has it, some intermediary has it. The money is in New York, in India. Where is the money? Citing the money. These are all very simple examples, very simple problems that the whole ecosystem today is still living with. That's a way of life, so we do it. I remember, when I was studying in college, the only way to know how much money I had in the bank was to stand in a queue with a passbook in hand, and there would be a guy across the counter, and there would be a line printer, do all of that, and then I'll know, oh, itna paisa hai. But that was the way of life, and I think how that has got disrupted, we all know. None of us ever stand in a bank queue to figure out, I can pick up my phone now and know how much money I have, transfer it to where I want. So technology has come a long way in this space. And I think, to your point, cross-border is the low-hanging fruit in the ecosystem today. Everybody who's involved in that business, most of them, the traditional players, they just haven't thought of letting go of those huge margins that they're sitting on. So, my vote is for that.
So what I hear...
I'm gonna make some controversial remark here. The opportunity is there, but I think I'm going to step back. I think as entrepreneurs looking at Whitespaces, you need to focus on two very important things. One is, can you digitize the entire value chain fully without an intervention, right? So that's the first piece. And two, is there a profit pool in the entire thing? Now, when you look at, I think both are important for you to actually succeed. I think what we have seen over the last 5-6 years of fintechs emerging is you're solving for one bit, but either you don't have the profit pool or that the entire there is a breakdown with some physical intervention. The minute that happens, I think that just the cost structures of fintechs just doesn't allow them to compete with with a traditional bank or a financial institution on the other side. So I think when you're looking at maybe something like cross-border, I think the profit pool is large, but it also means that there is some level of friction there. So watch out that you might not be able to scale as fast as you have, because you can do all the work, but it's like InsurTech, right? We've invested in many businesses. We think that we are ahead. We've given everything, but insurance companies integration takes 6 months. Now, you can't solve for a problem when the counterparty is not ready with that. So I think that those are important ones when you're looking at Whitespaces. So watch out for those. Not to say that it's not an opportunity, but I think entrepreneurs go in starry-eyed thinking that the tech is going to solve all of it. But I think there's paperwork, there's friction in the entire process that you cannot eliminate, and that slows down, and you're forced to pivot. So I think that's one thing that you might want to keep in mind.
No, completely agree, Mahesh. I think, and I completely agree with him that the profit pool is something you got to look at. I think the most spoken word, today's time when we invest is profitability. And, this sending funds abroad, getting it, onshore, the profit pools are massive. I mean, most of these guys who operate, talk to treasuries and the amount of money they make, bank treasuries and the amount of money they make, on their forex business is immense. So that is there. I think to his point, the other thing is technology. So the opportunity is there, the profit pool is there. Now, do you, as a set of entrepreneurs, have it in you to really build? And is the counterpart ready? The good news here is that the counterpart is ready. Because you're dealing with global banks who understand technology. Money moves seamlessly between US and Europe, right? And my belief is India is a little far ahead of both these geographies in terms of tech. Forget about technology and tech guys. People like you and me using tech, right? We are far ahead. So why not that space? Go for it. Come to us for funding, by the way.
So I can see you're very passionate around the remittance part of it, for sure. I think what Mahesh touched upon, saying as the white spaces are emerging, compared to say the last 5 years to the next 5 years, while it is important, but how more important has both governance, compliance, and profitability become now compared to say new ideas which are solving customer issues, which you would have looked at say 5 years back? So, just on a spectrum, are these becoming more important? Have they always been important but spoken about much more now? Just some perspective from the investor side on this would be helpful to the audience.
I personally feel they've always been important, especially on the fintech side. If you're driving a car, you just have to follow the signals, right? So you can't, take it lightly. Now what is happening, it's more talked about because these fintech companies have now scaled up. right? Now they are systematically little important for the economy and for the RBI to actually, and SEBI or any authority for that matter to kind of, look into it very seriously. And that's why it has kind of been more talked about, and with citing some of the examples which have happened recently. But it's very, very clear that from a top-down approach, if you look at it, the objectives of these regulatory bodies are very, very clear. Not to let the retail investor money go bad. So I think it is only going to be more and more important now, with technology catching up. It's the regulators always are a little behind, right? And then when it starts to become mainstream, that's when they start looking at it. So you will see this more and more happening as innovation increases in the country, and as these fintech companies become more, impact more and more people.
Mahesh, anything to add to it, Mahesh, Rajesh?
Look, I think your counterparty as a fintech is mostly a bank or a financial institution that is managing public money. I don't think there is any escape from the fact that they are over-regulated and will continue to be over-regulated. You can say the Reserve Bank is conservative and all of that. Probably one of the reasons why we have not had massive blow-ups in our banking system over the years, right? We've been able to manage it. So I think with due credit on the other side, you can always make a case that you can let go, but governance and growth don't have to be at the cost of each other. I think you can solve for that with growth. It's been done. There are a lot of organizations in our own portfolios that have grown, but yet been fully compliant. I'm sure there's enough and more debate in the next couple of days that will happen on regulation and Reserve Bank and whatnot, so we don't want to take away from that. But I think they're not mutually exclusive. It is important for you to follow the regulation, and the safeguards are not only for you. Reserve Bank is looking, the regulator is looking at it to make sure that they solve for edge cases as well, because you're finally dealing with public money as a counterparty. As NBFCs and fintechs raise debt, as they issue NCDs, I think that you have to be prepared for a lot more scrutiny, and it's better that you start from day one rather than think about it at some point in time. So I think that's paramount. I don't think you can escape from that.
I'll share an incident from many years back. I used to work with Templeton in those days. And I was an angel investor, very, very early days of the ecosystem. So there's this founder on a no-name basis. There's a founder with a very well-regarded company today. He was raising capital, and of course, very early days, so the requirement of capital was very limited. And they were trying to set up what we know today as P2P, right? They were one of the first players. I'm sure you know who the first player was. One of the first players to do P2P. And the founder used to travel to Mumbai and literally camp outside RBI. And in between lunchtime, etc., he would come and meet investors to raise capital because he was in Mumbai. To have this conversation with the regulator to please issue regulations. So P2P, and I think this is just an example, and you can extrapolate this to many other places. And this is global, by the way. It's not just India. Like to your point, regulators' job is to regulate, right? And therefore, by definition, and it's nothing wrong here, but I think regulators are not innovative in their mind. And like you said, their job is to make sure nothing blows up, nothing goes, and RBI has done a fabulous job in that, and compare globally. So I think entrepreneurs like yourself will always have to lead the way. It doesn't mean that you're trying to do something which is illegal, but it's not regulated yet. But that's because the regulations are not there. I remember when I started trading in stocks in the early 90s, there was no SEBI. It doesn't mean regulations were not there, right? But after SEBI came up and all the regulations came in place, we are all very compliant. Nobody even today thinks of doing anything in the stock markets which is not complying with what SEBI says. And I think every segment that we talk about, whether it is fintechs participation in the lending piece of it, or the remittances, or any space, wealth management, pick any space. The regulations are important. We have to, it is our responsibility, I think, as we explore those spaces further, to make sure that you take the regulator along. So the regulator, in my experience at least in India, is extremely open-minded. But of course, their primary responsibility is safety of our money, people's money, and so you will have to comply.
Actually, I want to add one thing. This opens up a new white space in itself. RegTech, right? I mean, you can call it whatever you want, but think about how many times you've just signed some PAN card and Aadhaar card and just given it to them. Every time you go, you need the same KYC again and again and again and again. For what? I mean, we have CKYC, we have this, we have now AA, but think about the friction that exists in the process, right? And in the last few days, you've seen regulatory action on account of non-compliance on this front. So I think over-regulation regulation is here to stay. I think that also opens up great opportunities for fintechs to see how you can actually enable the banking system or the other fintechs that are spending so much of money flowing into all of them to play catch up in many ways. So I think that's another area and a big white space.
Fascinating point. A show of hands. How many of us here feel a little bit of a pang of fear or something as you sign PAN cards to be given to somebody? Every time. And this, again, to your point, reminds me of earlier days, using the mobile to move money. There was always a pang of, is this money going to go to who I want it to go to? Right? Today, it's no longer a question. We all do it so easily, don't even think. So I think it's a fabulous point. RegTech. Can we again as an ecosystem come up with certain technology, business models, etc. out there that take this fear away? Can everything move online in a very technology-enabled manner? Why do we have to keep signing, and feel this every time I sign? You apply for a visa, for example. Ye sign karo, bank statement sign karo. Why?
So it actually moves naturally into the next topic, saying, is the enterprise white space or a B2B white space emerging? You were mentioning about a use case on, say, fraud management. Maybe it would be a nice.
Yes, absolutely. I think that's a large revenue pool, at least $1 billion revenue pool there, and banks over the years have been more and more accepting of fintechs, right? Maybe not to their core banking module, but definitely at the middle layer, right? You have, different fintechs selling different products which are integrated through APIs, and banks are open to kind of using them because they clearly know that that's not a forte. Everything, they'll not be able to build it in-house. What the fintech companies needs to understand is it takes time to crack these kind of deals. The sales lead cycles are longer. It's a trade-off, right? But if you get the client, it's a high ACV client, right? Like I was just mentioning before, we started this. There is an Israeli company called BioCatch. They are into the fraud detection space. They do behavioral biometric to analyze whether the transaction is legitimate or a fraudulent one. Guess how much Indian banks are paying to that company? You'll be surprised. The billing is anywhere between $1 million to $10 million from Indian banks to pay for a software on fraud detection, right, to an Israeli company. So, there is a lot of scope. And we've seen things happening up, more opening up. It will only increase. It will only make things better. It's banks right now and NBFCs. Eventually, it will be insurance companies. Eventually, it will be housing finance companies. So there is a lot of space to build on the B2B enterprise side, I personally feel, in my opinion.
Look, our own portfolio companies are spending anywhere from maybe 2 million to 10 million a year in tech. And not everything is going into hardware. I'm talking about software, I'm talking about new solutions. So this is only the beginning in my view. Everybody talks about data, analytics, AI, ML, but at the base, you need some of the base data to be ready. And I think large organizations struggle in many ways to actually use some of this. And I think fintechs can play a massive role in making sure that you can enable parts of this. And this is very sticky business because once you're in, I think you continue to be in. So I feel that this opportunity is equally big. B2B is not exciting for a lot of people, but because people say sales cycles are longer and whatnot. But at the same time, it's more capital efficient. It can be profitable much quicker. Once you're in, you can scale quite well. So I think there are merits to this rather than just saying I'll just go B2C. So I think that's one area that I think people should focus on. And I think this is only going to accelerate.
I think one word of caution on this B2B, especially the SME part that you spoke about. It's like when foreign investors first looked into India, saying, "Oh, there's a billion people, huge market, awesome, fantastic." They came, they deployed capital, and then it took a long time for them to really make any returns on that. And I think the B2B SME segment is, in my opinion, just that. It's a huge market for sure. There's no question about it. But that's also a segment of the market which, if all of us have some experience with them one-to-one, you'll realize it's a hand-to-mouth segment. They are the most, they're all growing. Every dollar that they save, every rupee that they can make will go into the growth of the business. And so therefore, most of the entrepreneurs there in that B2B SME segment are going to, extract worth of every rupee that they give you. So unless and until you really have a great proposition, the scales are always going to be tilted there. And I think it also speaks to a lot to our early stage ecosystem, at least at our stage of businesses before companies become very mature, is that we all, at least till 21, used to think that let's build it first. We'll make, profits will come, let's build it first. I think today the environment is very different. You've got to be cognizant of it. And I think, Adit, you allude to the point of a cycle. So we need to be, if you're building something for that segment, B2B SME, be very clear about where you are in that cycle, right? When the cycle is up, like for example now, and you can see all smaller companies gaining more business, revenue growth, you're seeing all of that, at least in the listed market, which is transparent. Great time for them to be thinking of, okay, now where else do I invest in technology? What else can solve my problems, etc. But when that cycle turns, it's a very difficult space to be. But a huge market for sure. Completely agree on that.
Just want to add one more thing on the B2B enterprise side, not the SME side. There's some data points showing that Indian BFSI enterprises, spend around 1% of their total revenue on technology every year, whereas that number is 6% in the US, right? At that scale. So that is one journey which I think eventually will happen in India as well going forward. More and more companies are going to spend more and more on technology and willing to pay for that.
So interesting. So I think the last question which I had is from a global trends point of view. What do you see as emerging global trends for Whitespaces in fintech? And with the amount of discussion around both AI, AI ML is normally used as 4 letters together. I believe the first 2 and the last 2 are very different. So, basis the entrepreneurial mindset of India, both on the intelligence part of it and the data modeling part of it. Are there trends emerging in that for enterprise solutions? Like you mentioned, fraud, and that's the end point, but at the back end, there's a lot of that happening. So is that a space emerging, or are there other global trends emerging which the Indian fintech community can adopt and be the trailblazer, if I may say, rather than a follower?
Quick snippet from me. This is the first conversation I've had either on this side or that side of the table where we've spent roughly, 40 minutes without mentioning AI. so this, but I think, on that point, I think AI, ML is going to touch every sphere of life, whether directly or indirectly, and I think as has been with every technology that has ever been thrown at us as people, BFSI or Fintechs are the first to get impacted, adopt it, use it, all of that. And that's a global phenomenon. So AI ML is for real. It is going to impact every sector, every sliver of the fintech ecosystem. I think the faster we adopt to it, the better. So even within our firm, we from, I think, more than a year back, we've all been saying, okay, let's use AI for this, let's use AI for that, you got to experiment, you got to try, and it's fantastic. It's fabulous what it can do for you in whatever walk of life you're busy with. So AI ML will not, I think, be a disruptor for anything. It's a huge enabler. It's like go back to when Microsoft launched Word or Excel. Remember those days. Everybody uses it. And I think India is in a great position from that point of view. We will never be able to make our own GPT, in my opinion. I hope I'm wrong on that. It's a far too capital-intensive project to undertake. But we can be fabulous users of the technology. We can build amazing businesses based on that technology.
See, I personally feel, what happens is, if you look at the history earlier, if you're a, chief innovation officer in a bank, you were earlier worried about, movement from on-prem to cloud, and then you were worried about, machine learning models, and now you're worried about AI, right? So there's always some, stages which everyone goes through. When it comes to AI, we're sitting on a lot of financial data, right? And that itself makes it possible to fine-tune the LLMs, right? Whether you use an OpenAI LLM or like Bloomberg, you can have your own, you can build your own. But the fact is, it's going to touch everyone's lives. It is going to get impacted. Lot of tasks like let's say a report generation or analyzing an equity research report, or for that matter, making your sales guy immediately enabled with answers real time because you're running an AI model at the back end, which is kind of working on your data continuously and throwing out results. I think it's going to make things better. Repetitive tasks maybe will eventually move out to there, and everyone needs to be ready for AI adoption, right? Adoption will start with maybe the non-core areas, but eventually will get into the core areas as well, and then you'll have all the consultants making money for AI adoption, in all these banks and financial services. But I think that there are a lot of small snippets of AI which you can at least start trying and using, right? Maybe co-pilots and autopilots, IFAs, and individual smaller people in the fintech and in the financial service ecosystem can definitely use a lot of tools, right? To do maybe tax filings automated and portfolio constructions automated with the help of existing models and financial data thrown at it. So a lot of things will happen. It's going to be an exciting time.
I'm going to give you a slightly counter view on AI. And I think the fintech industry needs to be ahead of the game simply because of AI. The reason I say that is because why is fintech, open banking, neo banking, all the buzzwords that emerge is simply because of the fact that there's a lot of inefficiency in the traditional model. Now, what AI is doing is actually bridging the gap between somebody who has the capital, who has the ability to invest, and that gap will keep getting smaller and smaller because they are getting smarter as well. Their operating efficiencies will start kicking in using AI, ML, whatever you want to call it. And I think that effectively means that there needs to be a lot more innovation. The task for fintechs gets a lot more difficult. Right? So I think that's the first piece. Slightly different take on how that's going to emerge. So that's the first piece. The second is that AI throws up different opportunities as well. Cybersecurity, for example, I think is going to be probably the biggest beneficiary of this. I don't know how many of you saw this article that somebody transferred 26 million, using the deep fake. Right, got the CIO or CFO or whatever on the call and did that, right? And that's just the beginning. And many of those don't get reported. These are actually very regular outside of India. You go to Singapore, you pick up the newspaper, the Straits Times, and you read it. There's at least 5 of such articles every day in that, right? So what that really means is that there's a lot more that will get spent on cybersecurity, opens up new white spaces, right? That's really what we're debating. So I think AI opens up a different sets of challenges for organizations to deal with. They are more complex, which means that opens up white spaces for the fintechs.
So I think I'll summarize a little and then open it up to questions next. So what I sense is you're saying that there are काफी सारे white spaces here. We've just scratched the surface literally, which is true because from a demographic dividend point of view, more digital native customers. So even in the B2C space, there is lots more. Solving enterprise issues, which is whether fraud management, transaction monitoring is also a white space. Cross-border, I could see the angst coming out on cross-border, which has been there for a long time, from an India point of view. And we are now the largest both inward and outward remittance country globally. So it's not a small profit pool or a consumer pool in that sense. So I think, so what I sense is there is no white space in anything, whether it's insurtech, regtech, lending, payments, monetization from a global point of view. So I kind of break it there and thank you. I brought in AI 40 minutes late, but I guess that's an important piece for each of us to just bring that will help efficiencies. Personally, I feel in a B2C space, India is a serviced economy. So just from a consumer service point of view, however much your digital processes are in place, AI could be the first solution middle of the night for the customer, and you don't need a 24/7 call center where the agent himself may say, I'll call you back. So, maybe that could be one big use case to solve, irrespective of what category of fintech or which part of the ecosystem we are part of. So thank you for a very engaging discussion, and open it up to questions. I think we have 10 minutes or so for questions. Go ahead. Is there a possibility to hand over a mic, or you can take one of ours?
Yeah, hi. I think Rajesh mentioned that there is a huge scope in wealth tech currently. So would you like to shed some more light on what key innovations you see happening in this space?
Sorry, which space? We couldn't catch that.
Wealth tech.
Wealth tech.
Wealth tech. Oh yeah, of course. So wealth tech, as the term, like fintech with fin and tech, so wealth and tech. And I think the simple way to think about it is, even the top 1% of this country, in terms of managing wealth, is not being done in a very professional, organized manner. Forget about the 99%, right? We all have a certain relationship with our wealth and money, and how we think about it, how we deal with it, where we invest, how we spend. There's a whole relationship there. But because we come, and it's ingrained in us, because we are coming from a very, we're still, as a country, we are a poor country, and I keep repeating that all the time. So for us to really think about managing wealth is very, very different than saving wealth and being frugal. They're all very different things, right? So from a wealth tech point of view, there is, forget everything, look at the SIPs in the stock market, right? A clear indication of people having money to invest. That and the markets do well, you keep investing every month for, let's say 5-10 years, you've created a huge pool of wealth for yourself. How are you managing it? How are you using technology? Who's leveraging technology today to manage wealth for the middle class? And I think wealth tech platforms for the middle class, truly, I think it's a huge gap there, right? A lot of the typical names that come to mind when you think of wealth tech have made attempts and tried to have some product for that middle layer there. But anybody in the room, any name comes to mind when you're talking of middle class wealth management?
Scriptbox was one of them. Scriptbox, Cube. But most of them failed. So that is why, I was curious, where do you see innovation coming up?
Exactly.
Because most of the wealth techs have failed.
Exactly. So you have to first understand how the middle class thinks of wealth. It's like as an analogy, on the B2B side, I spoke about SMEs. And I said B2B SME, they're hand to mouth, which is like the middle class here. Unless in a cycle when the business makes money, unless here in the cycle, you've got a promotion suddenly, or you got some bonus coming in, or you sold a residential property, some land somebody somewhere had. So those are incremental events, which actually exponential events that add to your wealth. How do you manage that? Somebody who's been living hand to mouth, let's take our example, 5, 10 years, 20 years back, suddenly you come into money because you've done fabulously well in your career, etc. Your way of thinking about money is not evolving at that same pace. So you really need help there. You don't even realize that you need help. So it's going to be, so there have been attempts, and you mentioned some names. None of them have really stuck. None of them are clearly market leaders at all by any stretch of imagination. So there's a huge, huge gap there.
I'd just like to add there, another way to look at it is, the maximum profit pool is in the top 1%, right? So people are going after there because there is large investable surplus. But if you look at, as what Rajesh mentioned, the mass affluents, right? Like anyone earning 10 to 12 lakhs a year is in India, a mass affluent category. That's almost like 130 million people in India, right? And their mutual fund penetration would be 4-5%. Insurance penetration would be 30-40%. Credit card penetration is still very low. So you start with a product which is a wedge in these markets, and then probably go full stack, and in the end eventually become an investment kind of a platform. But the challenge, what happens in wealth tech per se, is there's a lot of service angle. and you can't grow, if you're thinking from a tech perspective that the tech will solve everything, it will not happen. And startups are not okay to obviously have relationship managers. The economics don't fit in. So that's why there has to be a bridge. There has to be somewhere a balanced approach which has to be taken, wherein you bring in a certain service angle as well in the space, as well as a stronger tech, and then a full stack approach to probably get into the game, and starting with a wedge, right, to enter the market. And because as Rajesh mentioned, there's so many people now entering that. You look at the number of luxury cars getting sold in India. Yeah, there's so much wealth which is getting created every day, every year, and people don't have no clue on what's the difference between a saving and investment as well, right? 80% of the capital is still deployed in FDs and real estate. So there is a long way to go. It will take some time.
Any other questions?
One space is the NRI space, which is extremely still driven by paper. So it can be account opening, or it can be investments, or opening a demat account or trading account. It's a huge problem for an NRI to transact. Most of it is regulatory. So I don't know if somebody has thought about that. Where is the regulator going on that? If you have some thoughts, maybe you can share.
I have a few friends. I'm thankful for that, by the way, because I get to meet them on that excuse. All these people have to come to India if they have to resolve anything. It's, you can say we are tech enabled, everything, this, that, and all that. But if you have a relative, friend who stays in the US, UK, has, let's say, real estate or, bank dealings, etc. here, n number of times you have to come here physically. Well, usko bulao. And I always ask this question, I don't have an answer to that, sorry. That, if Mukesh Ambani has a problem, which bank is going to say usko bulao? So that problem is getting sorted somehow, right? Now, whether tech is able to do it, whether the name is able to do it, I don't know, anybody's guess. But that's a huge, huge problem. Again, therefore, I'm very excited about that whole, remittances space. It's not just about sending money and receiving money, right? It's about managing their assets in India. I mean, forget everything else. Just for the fintech part of it and just for the lending part of it, I think there are some estimates out there that till 2030, okay, forget even that because those are bigger numbers. Till 2030, our requirement from a climate perspective, and again, a lot of innovation there to fund that climate targets and environmental targets. We need about $1 trillion of investment. ये किधर से आएगा पैसा? इंडिया में नहीं है. We are a poor country. We all know how, step out of Mumbai, Delhi, etc. We are a very poor country. We don't have $1 trillion to invest in the next 5-6 years. So this money clearly has to come from other countries.
But the issue again there is regulatory in the cross-border remittances.
It's regulatory. It's also processes that are inbuilt. As much as you and I participate in fintech events and we are founders and investors in the fintech ecosystem, what percentage of the entire financial space, BFSI, is catered to by fintechs? And it starts with regulation, but it's also players, right? It's also evolution. So it'll happen as we go along. But again, thanks for pointing it out. It's a huge problem area.
And I'll just like to add there, since you mentioned NRIs, right? You have to understand why the processes are inefficient, right? Banks earlier were focused only on the domestic consumers, right? And because it's a large market and it's underpenetrated. And then when you want to cater to the NRI segment, what do? You have the same process, the same account opening form, you just make a few changes, right? The processes are not from first principles, from scratch made in a bank for the NRI, right? It's just few changes which are done to the existing process of a domestic client. And that's where all the inefficiencies come into play. When Mahesh mentioned that when you're working with a bank, you need to understand what their limitations are. For the banks, any of the large banks in India, NRI is what percentage of their total revenue, right? It's not the core, and that's why they are not going down, changing their entire systems and processes, and that's why it becomes a very heavily service and relationship manager-oriented business. There are startups trying to solve for it, but obviously they'll have to work with existing banks and their processes, and that's then so much you can digitize. A few things. If the bank says, I want a hard copy, I can't take a e-signature version, you can't do anything about it, right? And that's where those things are still there in the market.
But see, this is an opportunity in my view, a big opportunity. I'll tell you why. This is not an issue. If you can open a bank account today with, what do you call, a call, right? You can do whatever, that video call video KYC. And I think it's pretty well established now that you can do a video KYC. You can have a DIN number with a video KYC. You can do so many things, right, with a video KYC. I don't see any reason why a bank cannot accept and do a video KYC. So you have to put the OSV seal and stamp and stand there and put your finger. Now, it's a bank process problem. So I don't think we can solve for that, right? No fintech. But what that opens up is a great opportunity for somebody to say, can we build a digital bank, right? Now, many things are interconnected some of these are interconnected, but if you don't have robust governance processes, you're never going to get a digital bank license. The events of the last few days have demonstrated that fintechs come in, but they have scant regard for regulations, and hence it doesn't make sense for us to put public money in their hands. I think if you adopt that approach, then I think you're never going to get there. But the fact that these banks have no interest in solving this, and is a personal thing. My sister had a joint account and she moved from abroad to India. A son turned 18, had to go out. He had to come personally to convert his account and they froze everything. So she doesn't have access to any money. Cannot use the bank, right? Now, these are all opportunities. Think about the customer, how frustrated the customer is going to be.
As I said, the upside is you get to meet your nephew, right?
Right? So, all of these provide great opportunities. So, I think that these inefficiencies are probably one of the reasons why Whitespaces emerge. But within the, I'd say, the framework of what the regulations allows you, I think that banks have, in my view, different problems over the next few years, allowing more white spaces, right? This debate can keep continuing because they have a problem of actually CASA, in my view, because that pool is going to keep coming down. They have a problem of cost structures. They have a problem of antiquated processes, right? So, and a lot of people. So I think that in itself gives you a lot of opportunity to say, how can we bite at that heels? Let me tell you, look, there are very few industries in the world where you can actually have an industry growing at 12-13% per annum at scale, right? Financial services in India grows at between 1.3 to 1.5x GDP, nominal GDP. That's 13 to 14% or 12 to 13%. That's an outstanding market to be in. Think about the profit pool. It's probably the only financial sector where the profit pool is large, right? Everybody starts somewhere but ends with insurance and lending, because that's where the profit pool is. So I think that the inefficiencies on one side provide great opportunities for people, but you can't solve for some parts of what you're saying in terms of process inefficiencies in a hurry, because I think these are all somebody saying, yeah, just ask him to come and sign on this piece of paper, while video KYC is fully legitimate. So.
I think we'll take one last question. I think we're running out of time.
Hi Adit, Deepak here. So you mentioned about the cyber security part, doing business with the banks. So can you just light on some of the problems or opportunity in which we can do start business with the bank, problem which we can solve kind of thing. Can you just light on it? Yes.
Yeah. See, when you're working with a bank, you need to understand a couple of things, right? It's not easy for them to give you a pilot, right? Forget about a paid pilot, right? Even a free pilot. So it always helps if you have certain early relationships, right? To start off with, even if it could be a smaller bank, right? All these banks are exploring cybersecurity products, fraud detection products. If your product is kick-ass, like if you can make a great product which works, you will have an audience and you will be able to speak to the compliance guy, the security guy, the CTO, whoever it is, and kind of pitch your product and get a pilot. What you need to understand is security, data privacy. All these become very important when you deal with these institutions, right? Data protection. You need to build from day zero, keeping all those things in mind. You cannot move very fast and think that we'll move fast and we'll break things as we go. It's okay. We'll take feedback and we'll improve. It cannot be like that, right? The approach has to be very different. Your first product itself has to be of a certain above MVP's level to even go and kind of give a demo. So you can't be making errors. That's how you need to approach. And within cybersecurity, within fraud detection, identity theft, there's a lot of areas, right? There's been fraud happening in cashbacks and reconciliations and everything. So you need to pick your space and then kind of move into it.
Let me read out something very interesting about cybersecurity. This is Mary Edos. She's from JP Morgan, right? And at a panel, she says we have 45 billion cracks into our system that don't make it through. 45 billion, not on an annual basis, on a daily basis. 45 billion attempts to get through their system every day. So, it's a big problem.
I think when you're building a product, it's not good enough to just build a great product, but also think about how you're going to be able to sell it on the to a counterparty, which is really a bank or a financial institution. They move at their own pace. So you need to start thinking about how you're going to build an integration layer where they don't need to try and figure out one-to-one, but maybe some kind of a middleware where, and this is an area where maybe you can collaborate to figure out somebody builds that layer so you don't have to go through penetration testing, security, this, that, all of that. It touches so many data points, right? And you'd be surprised how overregulated a bank is. Okay, it is just unbelievable. So I think they have their own challenges to deal with, which are not very visible sitting on the other side. So you think that they're just moving slowly, but their life is not easy either. So you need to think about that piece as you build it to say that, look, if they're going to do hundreds of one-to-one integrations, that's not going to work. So you need to figure out a better way for you to actually approach a financial institution when you're doing B2B business. And I think that is something that you solve for at the product stage itself. So it becomes easier for somebody to say, hey, you know what, I'll just plug this in. I don't need to worry about whether this is from a security point of view, is it going to create more vulnerabilities? Because it just touches the middleware layer, and that's it, right? So I think that's an important piece for fintechs to think about as you deal with that. I think that will reduce the amount of time that you, in the entire sales cycle. I think one of the biggest pieces is really that you won the contract, it's not scaling because CTO is busy, his priorities are different, he's fighting a new fire, one of the 45 billion attempts to break into the security, right? So you really don't know where you stand. So solve for that as you go in. As you build API layers, figure out where all this data touches, make sure that you have, if you have friends on the other side who are building, collaborate so that you can build those API layers, integrations, put out the code, make it public API codes that are available. Make it easier for someone to say that, look, you can just really plug and play rather than say, oh, okay, let me think about it. I'll do a POC. I'll then run it. Then we'll segregate some data. By the time they do that, their priorities have changed. RBI has come out of the new circular, and his life is quite different. So I think you're in the back burner. So.
But having said that, it's a great space to be in. In the US alone, cybersecurity would be a $150 billion market, right? Not just fintech, across cybersecurity. In India, we're just getting started.
Thank you, everybody, and hope you enjoyed it as much as I did. I got to pick a lot more information. The good thing is lots of opportunities. The bad thing is there's nothing which is not an opportunity, so you don't know how to prioritize, but I'll leave that to you. Thank you so much.
Thank you so much, everyone, for this interesting discussion. Thank you.